Wednesday. Happy Wednesday. Happy Odin's Day, as they say. And all of your Norse god celebrations be fun. Are you kidding? Um, so, yeah, happy Wednesday. And it is time to talk about some crypto stuff. Let's go. Right? What is happening in the market? You may have seen, you may have noticed that yesterday, when the traditional markets came back after the Labor Day holiday break, they did not go straight to the moon, did they? Unless the moon is down below somewhere. So, what did happen? Well, what happened is the VEPs indicated that the prices would go down. And right there in the middle of our live stream at Alpha Trading, saw it happen in real time. Prices began to drop. And as soon as the traditional market bell rang, prices began to run down. 1 minute after the other for a good 45 minutes or so before taking a leg over for a couple of minutes and then continuing down at around another 45 minutes to an hour after that, dropped some more, then went side and then dropped again. I don't know if any of that got recorded or not. I don't know. Anyway, back and just a brief quick memo, man. Some things really have a way of throwing me off my thoughts. Okay, so the markets, crypto markets, what do? Well, they followed the VEPs and they walked down, right? Why? Because the setups were there, right? If you looked at the volatility and the entropy, things were sitting where they were. So the probabilities were to the downside, especially on the low time frames where the changes started to happen. And all of the confidence everybody had, all the exuberance, everybody thought, oh, it's September, market's back, let's go. And if you'd watched the video that I made before the market opened, or videos that I made even before the market opened, where I spoke specifically about the fact that no, it does not need to go to the moon just because people are back from Labor Day. Just because people are back from vacation does not mean the market's just going to jump, right? In fact, there was a lot of profit taking yesterday, and there still is today, right? And the prices have been dropping steadily. There's been a lot of sell pressure. Why? Because people are jittery and nervous, and so it doesn't matter what the reason is. There's a bazillion reasons people are selling. Doesn't matter what the reason is. Maybe they're just having a selling fest. You know, maybe people are just like, I'm bored of this. Doesn't matter. Doesn't matter the reason. None of the psychology matters. None of it matters. There's buy pressure, there's sell pressure. That's it. That's all that moves the market, right? What moves the market is the VEPs, right? What causes the VEPs is buy pressure, sell pressure, right? Why do I know that the VEPs moves the market? Well, what is VEPs? Volatility, entropy, probability, statistics. Let's go through that letter by letter. What's volatility? The standard deviation of returns on investments, right? Specifically, the standard deviation of log returns of investments, right? So what is that? Well, that's the difference, the standard deviation, the normal difference, the delta between the buying and selling price, right? That's in the marketplace on the returns on investment. That is what volatility is. It's not price. It's not price. It's the standard deviation of returns, right? Price is a byproduct of that, right? Once the standard deviation of returns is correlated to the past price action, then you can see a tendency for the direction of the price on the current and next candle. Right? That is what volatility is when it comes to trading. What is entropy? Entropy is, right, the diffusion of energy in space, right? Hey, actually, entropy is the dissipation of energy in space, the diffusion of energy in space. Well, how does that have to do with trading? Well, entropy can tell you whether or not an asset is inside of a trending walk, a trending move, or a random walk, right? Because that's the only two states that assets exist in, right? They're either in a random walk, which is what they're in most of the time, or they're in a trending move, which they're in sometimes, you know, depending on the asset, 10, 20, 30% of the time. It's roughly 20% for most assets for pretty much any time frame. You know, yes, it can vary the exact percentage of the time from asset to asset and time frame to time frame, but it's roughly that, right? Just as a gross general rule, if you want to know. The beauty of it is you don't need to remember, right? Because we made an indicator that shows you. You don't need to figure out, is it random or is it a trending move? It's very clear on our chart. Right? You just need to catch it. And you do that quite simply. Like the moment that you see that the asset is either going to obviously expand into a trending move from a random walk, or the moment that you just see it pop into a trending move and you just take it, right? Now, can you front run those trending moves? You can. Obviously, that increases your risk. So if you're wrong, you just get out of the trade. You have to trade the 1 minute. No, you don't have to trade the 1 minute. You can. I find it's generally better for me to do that, but that doesn't mean it's better for you. You know, maybe you'll trade the 15-minute better. Maybe you'll trade the 3 minute, the 9 minute. Who knows? Heck, maybe you'll trade 4 hours time frames. For me, that's too long. But you know, some people are comfortable trading different time frames. So by all means, trade what you like. If you trade at all, of course, it's not for everybody, right? Trading is not for everybody. And I mean that like the same way that, you know, being a doctor is not for everybody. Being an engineer is not for everybody. Being a lawyer is not for everybody. Being a merchant is not for everybody, right? So bear in mind what you like to do as a trader if you are a trader. Right? Bear in mind whether or not it's for you at all, because frankly, for most people, it isn't a thing they should do. You know? Most people are not good traders, and that's okay. Just like most people wouldn't make good doctors. Most people wouldn't make good engineers, right? People have their skills, their abilities. Everybody's different, right? We should do what we're good at doing. And, you know, some people turn weaknesses into strength and all that. That's fine. But when it comes to trading, you know, you don't want to turn your passion for trading into a record of just losing money all the time as a trader. That would not be good, right? In that sense, do what Warren Buffett does. A, don't lose money. B, C-A. All right. Just going to do it for now. Happy trading. See you. Oh, remember to show up to the Alpha Trading live stream. The live stream started at 9 a.m. Eastern Time, Monday through Friday. You can get there by going to alphatradinghq.com/Discord. Okay, that's it for now. Cheers.